Stockwatch is brought to you by Merchant Waste. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant Waste. Finance, invest, insure.
You're watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions tonight are Ricus is from PSG Hole in One Ruimsig and Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392, or on X @BusinessDayTV using the hashtag Stockwatch. Thank you so much for your time, gents. Very interesting moves that we are seeing ahead of the data and the monetary policy decisions that are set to come through from tomorrow. And interestingly, we have seen gold actually spiking. Zwelakhe, another record high. I mean, just when you think that gold cannot go any higher, it literally does that.
No, I think it can go higher. Look, I think there are two main factors in my view that are driving the price of gold. I think one is the geopolitics. I think we are seeing a storm brewing in Eastern Europe with Russia and Poland. It looks like there's a standoff there. I think the second thing is that the whole transition by the central banks trying to diversify away from the dollar. I think that is a long-term trend. We've seen the central banks buying more of the gold. I think more in the short term is we are seeing that the cut in rates, I mean, I think there's been over 80 rate cuts globally. I think that rate cut encourages risk-taking in financial assets, and I think gold has been the beneficiary of that, like the rest of the stock market.
All right. Ricus, and I'm seeing here actually Pan-African Resources is leading the gains that we have seen. Would gold miners be, I guess, on your radar in terms of nibbling in gold? Yeah, where are you actually in terms of that positioning, gold in your portfolio?
Yeah, if gold's running, you should be in gold shares because that's where your gearing comes from. And depending on which gold mine you buy, in other words, how marginal they are in terms of costs. If the gold price goes up, your more marginal producers tend to go up quicker than your more defensive, if a gold share can ever be described as defensive counters. So things like Pan Africa, which by no means is marginal, but has the capacity to increase the production volumes. That's the other factor you've got to take into account. You know, if you buy Barrick Gold, for example, it's difficult for Barrick Gold to produce more ounces because it's huge.
Okay.
Whereas Pan Africa, is a smaller operation. They can either buy in more resources like they've just done on the East Strand, or otherwise expand existing operations and basically increase their gold output. And with the gold price in their favor, that drops straight through to the earnings line, and that's why you see the type of outperformance from things like Pan Africa, if you, for example, compare it to a more stable producer like Anglo Gold.
All right. Well, another interesting move that I saw today is the jump in MTN of almost 6%. Zwelakhe, I was looking for a sense, there was nothing. Is there any specific reason why MTN's up so much on the day?
I also looked, I couldn't find anything, but I mean, maybe Ricus knows something.
Ricus, any insight from you?
Nothing really, except two things. First of all, MTN, well, as of yesterday, was almost 20% down from its recent high, which is quite a drawback if you think about it. So
Yeah.
it was probably time. Maybe what has boosted it, the price today, and I mean, I'm just guessing over
Yes.
here, is what's been happening with oil, where we see Brent pushing above $68 at the moment. So oil has been firming on the back of geopolitics. Ukraine bombing every refinery they can target in Russia. That's good for Nigeria, oil price, and we know how big MTN is in Nigeria. But that's the only two exogenous factors that I think is in MTN's favor. But why today specifically 6%?
Yeah.
No news that I know of.
Okay. All right. No, I definitely hear you there. Well, gents, let us go into some of the questions that have come through. Well, actually, going back to the resources, there's a question here on the Resi 10. That's up 82% over the past year. Are there reasons to believe that it still has room to run? And are there secondary benefits that will spill over into our local economy? Well, let's actually start off there with what we've seen so far this year. And Zwelakhe, is everybody responsible for that jump in just that whole Resi 10 complex? Well, maybe, yeah, I would think maybe some of the laggards maybe would be coal.
Definitely. I think the coal and the diversified lag, but I think the precious metals component of that market has done much better. So gold has led the sector, and then I think the PGMs have more recently in the last 6-8 months has also caught up. But the diversified have struggled, and BHP has struggled quite a lot. I think we've seen Anglo American kicking in also now that they spoke about this tech merger. And I do think that if one looks beyond the current period, I mean, look at the portfolios, I think Anglo American's portfolio would be much better positioned for a tailwind where there is electrification, whereas BHP would still be in need of a infrastructure kind of investment that I doubt that we have this cycle this time around, with China not focusing more on the technology capacitation rather than the infrastructure sector. So I think the precious metals would probably likely continue on the gold side. The PGMs, the supply side discipline might help. But on the diversified, I'll probably go with Anglos and go underweight BHP.
Well, actually, quite an interesting second part of that question. Are there secondary benefits that will spill over into our local economy? Yeah, Ricus, do you think that we could have a good budget, a good midterm budget coming up?
Who knows? I mean, on the income side of things, obviously, if mining does well, that's good for the economy in general. It remains our biggest income provider as far as tax revenues are concerned. The budget depends on fiscal discipline and spending, and let's just say the government forecasts have been optimistic for a very long time now because it's part and parcel of why we're sitting with the anemic GDP growth rate we are sitting with. Just going back to the to our Resi 10, you know, that index is back to the previous two all-time highs back in 2022 March, I think, and 2008. It's pushing above that. But if you look a bit broader and you take a look at the at your broader mining commodity index, in other words, including offshore miners, even that's up about 40% from its lows about 5 or 6 months ago, and also still pushing higher. It doesn't look as exciting as our market, as our Resi, because of the gold shares overweight in our Resi index. But the broader resource sector doesn't look too bad either. That it's about 10% away from its peak back in 2023.
Amazing. And actually, the viewer put in a hashtag there, hashtag thank you, Wayne McCurry. And we know that Wayne McCurry retired betting on the resources to come back. All right, well, let's get into tech. Naspers. Good evening. With the Naspers splitting on 6 October 1 to 5, will there be a surge in price after splitting? What is the panel's feeling? Zwelakhe, what is this about?
Historically, Naspers just splitting the shares. I think they're sitting over 5,000 now. They'll split their shares 1 to 5. So for every share that you hold, you'll have 5 shares. I think historically...
What, a stock split?
Yes.
Okay, all right.
Yeah. So historically, what happened was the companies, after the stock split, the lower share price tended to rally post the split. So it might be beneficial. I mean, that's just academic studies that have been done. But yeah, I think that's probably what they're also targeting.
Okay. Well, I mean, would that then push investors to go into the stock ahead of this, Ricus?
Yeah, it might. It's a very short-term effect, and let's face it, Naspers' price in the end is still dependent on what happens with Process and Tencent. So it broadens the market for Naspers people that could possibly not afford it, at current prices. It makes it a little bit easier to buy, but I wouldn't try and game a share price move just because of the stock split. What's more interesting is, for example, Tencent, which still forms quite a huge part of the Naspers valuation. They, for example, are having their first bond issue in 4 years to fund future AI development. I think that's where your focus must be, rather than just on whether you're all of a sudden getting 5 shares in the place of the one that you previously held.
Well, this is interesting, and I've been hearing a lot of calls for Capitec to also embark on a stock split. All right, gents, let's get into more questions. Ricus, is Tsogo-san a buy at these levels? I think Tsogo-san has kind of been the laggard in that hospitality space, and particularly seeing the disappointing performance coming from online gaming, a very lucrative area in that sector at the moment, but seeming that they're the only ones that haven't really clocked the benefits of that. What do you make of Tsogo-san at this point?
Yeah, we've had a rally over the past few days, but I think today down about 4 or 5%. So obviously there's some bottom picking going on, but looking forward, they're not well positioned to gain from either the online gaming side of things or the tourist effect. So I would rather take a look at the other counters in that sector, whether it be City Lodge, which is looking very interesting after their results, Sun International, which I also thought had a pretty decent set of results, and then of course Southern Suns, which on the release of their results are very optimistic in their outlook, not only for local but also their overseas operations.
Yeah, I'm actually looking at that yearly chart of Tsogo-san, and it is not looking good. It has just been on a downward momentum. Not really seeing any significant signs of a change in trend there. I don't know, Zwelakhe, Yeah, would you be seeing this as an opportunity to get in before any positive sentiment comes in, or is it just not looking good for Tsokosana at this point?
Yeah, I also wouldn't think that it's looking good at this stage, but it might just be a beneficiary. I mean, we are seeing rate cuts, and I don't think those have filtered through into the economy. We might start seeing some of those benefits coming through. So for somebody who might maybe be bottom fishing for a stock that might perform surprisingly better than expectations, I think might be a stock to consider.
Okay.
But I think if you're looking more longer term, you'd probably do better at Southern Sun. Yeah, I mean, I think
Okay.
I'd go with those. Even City Lodge, I'd be a bit cautious in that they are business driven. A lot of their business of their hotels are business driven, but also I don't think the infrastructure is. They've upgraded their hotels well, so it might be getting a bit of competition from other areas of the market.
Interesting. Well, let's get into telecoms, but not Blue Label, because now they kind of separating themselves from the telecoms area. The question is, Blue Label, any insight on what is happening with the Cell C listing? At this point, Ricus, not really any new information, right? They're just trying to see how they can, I guess, restructure the company ahead of that. Yeah, any significant developments that you've heard of with that listing, potential listing?
I have no real insight in Blue Label. Obviously, the share price had a magnificent run, but 30% down from its recent highs. I'm frankly too scared to say anything about that because I'll have a whole Twitter army coming down on me. There's some fabulous supporters of the company online.
Yeah, that
but,
is funny.
but yeah, no, I
Yeah.
really don't have the necessary insight into what's happening with Blue Label and Cell C.
Yeah.
Obviously, it's very interesting,
Yeah.
and there's arguments to be made for the Cell C model where they're piggybacking on the back of infrastructure and the type of gains they can get out of that, but not
Okay.
no
Okay.
no expertise in that
Okay.
from my side.
Zwelakhe, are you brave enough to comment?
Yeah, I mean, I think them returning back to their old business of airtime distribution. I think that's positive for them. I mean, getting out of Cell Cs like the US getting out of Afghanistan to some extent. So that Cell C has been the Afghanistan of the telecoms market for quite some time. Guys have tried to turn it around, but it looks like they've managed to cut some deals that have enabled it to get some margin without having to spend capex. And hopefully we see that performing going forward, and they'll release the stock over time. So I think there could be a value unlock in the stock, operationally returning to their core business, and then from a capital allocation point of view, unlocking some value in Cell C. I think that could be positive.
All right. Well, talking about something positive, and as we're talking about corporate action, Libstar today came out with an announcement, of course, with their interim results, with a cautionary announcement that they have received some expressions of interest for a potential takeover. Ricus, I mean, was this expected?
I think there's been rumors in the market, and Libstar, since listing, have been in a continuous process of refining what they do. I think when they listed, there's something like over 1,400 different product lines, which gives you an idea of the complexity of what they were doing then.
Yeah.
Since then, they've simplified. They've closed down unprofitable businesses. They've tried to reshape the company. It's been a long struggle, but obviously there is an outsider interest in the essence of the operation itself, and that, shall we say, seeing of value follows on to my stock pick a little bit later, because I think that whole sector is looking interesting.
Okay. And it's quite interesting that this buyer, or the potential buyer, is coming in as Libstar is busy with its strategic review as well. Is it just looking too attractive at this point? Zwelakhe, too good to pass up?
Look, I think if you can turn it around, it's probably quite attractive in terms of the historic decision making. I think by management seems to have been focused on getting capacity utilization filled up, which makes sense. But I think they might be at a point now where they need to be focused and dedicate a certain amount of capacity to key products, and I think, as Ricus says, I mean, over 1,000 products. It becomes difficult to manage that, because you run a short line on this, and then you have to reset the machines and run a short line on something else. It's not very good. So if you can narrow the business down to few big lines, I mean, that might be a big turnaround if you can get it right.
Okay, all right. Well, talking about getting things right, gents, let us get to your stock picks for today. You were talking about kind of value unlock. Ricus, where are you seeing that at the moment?
Yeah, same sector as Libstar, food producers and AVI industries, which, as Zwelakhe just said, somebody that knows its business, knows what lines it's got to concentrate on, able to manage costs, a very decent set of results in very difficult economic circumstances, fairly positive, I would have thought, outlook going forward as far as consumer spend on basic products are concerned. And I think it's a well-managed company at a decent share price at the moment. Yeah, there's certainly been some interest in not only AVI, but in that sector. I mean, Libstar, with somebody else coming in to sniffing around, possibly buying the company. Rhodes Food Group, not a great set of results, but the market was expecting worse. Take a look at Tiger Brands' share price, also starting to pick up. Premier Foods came out, very decent set of results. So I think that sector is positive, and AVI is my pick in that sector.
All right. Well, Zwelakhe, what are you chewing on today? Your stock pick?
Yeah, I've gone for a gold stock that is probably offensive and defensive. Defensive in that it operates in jurisdictions that are relatively safer. Nico. It's based in the US, or listed in the US, and operate in Mexico, Canada. So very good miner, cost of production around $1,300. At a current gold price, I mean, they're doing very well. I do think that, I mean, it's probably close to fair value at the current gold price. But I think that if we see the developments in the Eastern Europe deteriorating, gold would probably do better, and you want to hold gold in a jurisdiction where the mines are not going to be confiscated, like we saw with Barrick's experience in Mali recently. So I think that it's both defensive and offensive.
Okay, all right. Well, thank you so much for your time and for your very, very interesting analysis today, gents. We really appreciate it. That is all for tonight's Stock Watch. Thanks to our guests, Ricus from PSG Hole and One Ruimsig, and Zwelakhe Mnguni from Benguela Global Fund Managers. Up next, The Close. Stay watching.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.